It's Kelly OG, and what I do is make people richer for a living and also happier and also feel more fulfilled and just teach them overall different ways to make money because ultimately that's what gives us a better life. However, money isn't everything. I know there was a quote that I saw that said, listen, money isn't everything, but it does affect everything. And so we want to be in a position where we're so comfortable in life that we don't have to worry about money. So today, I know a lot of you are wondering, what is options trading? How do you do it? I personally started with $26 trading and have turned that into over $100,000. And so from my mistakes that I've made along the way and the intense amount of hard work that I put into it, I was like, okay, let me make an options trading breakdown video. And I did it. And then guess what happened? It got like 150,000 views, but the watch time is only like 6 minutes on a 40-minute video. So I said, you know what? I want everybody to trade because I love trading. You don't have to be super passionate about trading, but at least use it as another source of income. So I was like, okay, I'm going to make an options trading video and I'm going to break it down in 10 minutes. It's really going to be less than 10 minutes. And I'm going to make sure that you get this down. And if you want more further in-depth info, boom, I got a full breakdown video. Only 40 minutes, it's less than an hour. So what is options trading? So one thing about me, if you haven't met me before, I like to describe things in terms of how people will actually understand it, not the dictionary definition. Like if somebody said, what is standing? I'll be like, dude, it's when you get up, right? But then the dictionary definition is like, oh, when someone places 2 feet on the floor and they propel their body in an erect position. Like, who's gonna understand that? So anywho's options trading, right? It's when you have the right or the obligation to 100 shares of a stock. So how does that work? Basically, think of like we have a box. Let's say we have like a little Amazon box. Like, okay, this AirPod box. So this is what you'd call a contract, an options contract. Inside of this would be 100 shares. So you do not have to have, thousands of dollars to buy 100 shares of a stock. You can literally buy one contract for as little as $1 and boom, you have 100 shares. Funny story, my friend actually bought 100 contracts of a particular stock. It was BBIG right before it blew up. He bought 100 for $1 each. So he spent $100 on those contracts. And that $100 actually turned into $13,000. He made $13,000 in one day. So he turned $100 into $13,000. And that is the beauty of options trading. So I know now you're like, okay, I'm kind of locked in, Kelly. Let's hear what this is. So this is an options contract. Inside of the options contract holds 100 shares. Okay, you're just borrowing them for the time being. But whenever comes an expiration date, you have to give it back, or not necessarily give it back, but you have to sell it for either a profit or a loss, or you can do what's called exercising. Now, before we talk about exercising, let's get to the dates. So far, options contract, 100 shares are inside, right? Boom, you have a date. So the date is like an expiration date. You have to hold this contract until this date. You can sell anytime before the date, but you cannot hold it after that date, right? So today is what? February 3rd. So let's say I have an expiration for February 4th, because that's tomorrow, Friday, and I bought one contract. That means I have to sell it today or tomorrow. On February 5th, I can't try and sell it. On February 7th, I can't try and sell it because I won't own it anymore. So if you don't sell it, it will expire worthless unless it's already super profitable, but you have to sell it the day that it's supposed to expire by 2 p.m. Now, boom. Why do people choose to trade options? Why don't they just buy regular shares? And if you don't know what a share is, it's just one price of a stock. So a stock is a company that's publicly traded in the stock market. And let's say a company is worth $50. One share is $50. 2 shares, $100. Cool beans. Now, the reason people like options is because you can make money both ways. You have the option to make money online, but both ways of a stock. So if a stock shoots up, you can make a ton of money. If it shoots down, you can make a ton of money. Literally both ways. Now, a lot of people recently, because the market's been very volatile and a lot of stocks have corrected 15%, 30%, some of them have corrected over 70%, which means correction, basically they shot down. Okay, but I wouldn't call it a crash because it wasn't sudden. Anywho's, a lot of people are like, my portfolio, and options traders are like, still making money though. How? We're playing calls and puts. So calls are when you make money on a stock going up, and puts are when you make money on a stock going down. So here's my beautiful phone right here, and I always like to use this analogy. You pick up the phone to call, pick up, and you put down the phone when you're done. So put down, pick up. Pick up the phone to call, put down. So call is up, put is down. Okay, beautiful. Now you understand the very basics. You have a contract, you have an expiration date, and then a put or call. So when you want to go figure out what you want to buy, you're now going to see all these different numbers. So if you want to pick a call or if you want to pick a put, boom, you're going to see all these numbers. So I'm actually going to pull out my phone right now and go on Robinhood and start recording. And so let's say I'm going to go to a random stock like Square or Block now. Currently can't trade on Robinhood because, I don't know, some social security stuff that they're working on, and they've been doing it for months, and I keep contacting their support and they keep prolonging it, and it's frustrating. So I have moved to another platform, Webull and TD Ameritrade. However, it's now a perfect platform for me to use to describe what all of this means, because it's an empty account. As you can see, it has 74 cents. Now, I think it's going up. That means you think it's going up. That is a call. Right, beautiful. And if you think it's going down, that is a put. Now, they also have different strategies such as strangles, iron condors. I like to trade naked calls and puts, and that's what I'm going to describe for this video because I'm not going in depth. Some people say that's so risky. My response to that is manage your risk. If you're not willing to lose $100, don't put $100 in, because in options you can only lose as much as you put in. But anywho's, so we're gonna go to February. I'm gonna go to February 11th, but tomorrow will be February 4th. And so you're gonna see these beautiful things. You see the current share price is 104.84. And then I'm screen recording my screen, so y'all will also see this on the screen as well. But then you see that there's a $104 call, $105 call. What does that mean? So it doesn't necessarily mean what you think the price will go to. That is just what's called a strike price. You want it to kind of go above there, because then you'd be considered what's in the money. Now, what is in the money? So in the money would be, let's see, I touch this one and I touch, okay, this one as well. Right. These two is what you'd call at the money. So they are currently at the current share price. Now anything below the current share price for a call is in the money. That means price is already past that. Anything above the current share price, let me go ahead and put my phone on do not disturb. Anything above the current share price, if it hasn't touched that, that's out the money. That's out of reach. So in the money, it's in reach. Out of money, it's out of reach. In the money is generally more profitable than out the money because it's already past that. You're very comfortable. If you try and buy it, it's going to be a lot easier to exercise. Now, we're going to go ahead and press these, and I'm going to show y'all something beautiful called the Greeks. Now, the Greeks, you have delta, gamma, theta, vega, and rho. Delta is the amount of money you make per dollar that the stock moves up. It's a rough estimate because all these numbers change, but if you're looking for a contract to buy, you can look at it real quick and do the math. Now, gamma is the amount of money, sorry. Delta is the amount of money you make per dollar. Theta is the amount of money you lose per day of holding that contract. So if your delta is $46, I'll round it to 45, and your theta is $38, so I'll round it to 40, right? So if on one day SQ moves $1, you do 45 minus 40, you make $5, okay? And if you have 2 contracts, you make $10. If you have 3 contracts, you make 15. You do the math, okay, cool. Now, if it moves $2 on any one given day, you now do 45 plus 45, which is 90, minus 40, you now walk away with $50. Yeah. If it moves $3, boom, 45 plus 45 plus 45, you do the math, minus 40 every single time if that's one day. So it's not with every dollar, you're just moving. That's why you make more money when a stock moves up a lot. Now, Vega, that's more so the volatility. Gamma, you want your gamma kind of higher because it'll move your delta and make you more money, or it could lose you more money, you know? And then Rho, can't really calculate it. I tell people don't worry about it. If you want to find out more, you can look at other options trading breakdown videos. Chance of profit, a lot of people get scared. That doesn't really matter. You just want to know how the stock moves. Volume, that's the amount of people that have traded this stock, and then open interest, or not stock, this contract, our beautiful box. The amount of people who have traded this contract, and then open interest are the amount of people that are currently holding it or are interested in holding it. Your high, that's the high of the day, how high has it gone. Your low is the low of the day, how low has it gone. Previous close, yesterday, what did it close at when market closed? And so real quick, I know you see $7.70, $4.47. Yeah, you're gonna see that. And remember that with options, you get 100 shares. So essentially, that $7.70, that's per share. So anytime you see $7.70, $4.47, or if we scroll super high up and you're seeing 42 cents, 38 cents, well, boom, that actually stands for dollars. So you're looking at $42, $38, $717. So just do any number you see times 100, boom. And now for puts, it's the exact same thing. The only difference is that in the money, what price is already passed, because it's passing it on the way down with puts, is going to be above this area, and out the money is going to be below because price has not touched that area yet. And then whenever you're looking at your Greeks, don't get super scared. The minus sign is only because it's a put. It's going to work the same way as calls do. Trying to see if there's anything that I forgot. I don't think so. That is essentially how options trading works. I hope that was 10 minutes. I was talking super fast. If you have to watch it a billion times, then go ahead. But remember, you get a contract, and this is buying options. This is not selling, just options trading 101, how you buy it. If you want to sell it, though, you actually need to own 100 shares, and you can sell what's called covered calls or covered puts. And basically, the market will pay you simply to put your shares up as collateral, but you get the money up front rather than waiting for it. And basically what you're saying is, I think the stock will not get to this price. And if it gets to that price, you lose your shares, but you keep the money. You don't actually lose everything. You get to sell your shares, but at the price originally that you had set it at. Or if it never reaches that price, you get to keep your shares plus the free money. So that's for people with far more capital. If you have small capital, you're starting out, a lot of people like to buy them. Contract, 100 shares. Pick up the phone to call, put down the phone when you're done. Super easy stuff. Sell it before the expiration, and make sure you follow me on all social medias because that's a smart thing to do. I know y'all are gonna watch this video. I'm gonna post it, and I'm still only gonna get like people stop 3 minutes in. I'm gonna be like, I can't win with y'all. Then I'm gonna do options trading in 3 minutes, options trading in 1 minute, and next thing you know, I'll just be sped through. But anywho's, if you want to check me out on all my social medias, it's at KellyOG. I'll never ask to trade for you. I will never ask you to send me any crypto or any money. Again, I do stocks, so don't get scammed out here. Anywho's, it was super nice talking to y'all. I really need water. My throat is scratching me. So I will see y'all on the flip side. Shoo. You're supposed to turn the camera. You know you're supposed to turn the camera. It's too late. You ain't turning.